about his latest thesis with regard to how EMs are placed relative to India now going forward, and how maybe the US markets are placed relative to EMs as well. So, Manav, let me throw the floor open. Let me first allow you to tell us what the thesis is or surrounds. You seem to be suggesting that EMs will likely underperform India, and within the global marketplace, US will underperform EMs as well. So EMs is where some of the outperformance will lie, and within EMs as well, India will outperform. Give us the sense as to why.
Yeah, thanks for having me, Harsh. Wish you all a very happy Diwali. Firstly, the market construct has been such that the Indian markets have been in a sideways consolidation. I would say a healthy consolidation in last 15 to 18 months, and we've seen this scenarios happen in last 15 years. This is the fourth time it has happened, but largely when we are taking a little bit of a macro perspective. When we are looking a lot of things in play, especially how the emerging markets are shaping out, especially a larger breakout in Shanghai after 10 years. Taiwan is getting into a bull market after 30 years. It has been in a bull market in last 2 years odd. And the construct of the emerging market still suggests a 25% upside even from the current levels. So when we are taking a ratio of the US markets with the emerging markets, the ratio has actually seen a breakdown, which indicates a preemptive thoughts of where the US is likely to underperform the emerging markets. And broadly speaking, the Nifty ratio versus Shanghai and the Nifty ratio versus emerging markets are all at an inflection point. We have seen how how our markets have relatively been an underperformer on the emerging market front and also versus the US market. But I think that scenario is also largely coming to an end. A lot of foreign institutions have been underweight India since a while now, and the way Indian markets are now trying to stage the breakout, I think the larger context remains for a strong catch-up rally, which will eventually start to play. And we've seen how the short squeeze by the FIs are currently driving it higher. So our base case is that the emerging markets will do very good for at least a couple of years from here, and out of which India will definitely see a strong catch up as it has been a very strong underperformer, and the inflection point is indicating to for a larger upside play. Few of the data sets which are further violating are further validating our scenario is one is the US 10-year yields, which is kind of cooling off from its highs, even though, largely we have seen how the 10-year yields across the globe has been higher for a while, but the 10-year US 10-year yields coming off and with the dollar index also slightly being on the bearish side, definitely these two combination is likely to see a strong fuel of liquidity continue in the emerging markets. So that's why we are quite bullish in that scenarios, and which is going to be very promising for the Indian markets also.
Manav, before I get to Indian markets and probably quiz you on that, and viewers, for perspective, Manav has got a couple of really good calls all through this year, and especially on the metal side, where at the start of this year, when I spoke with him, he spoke about how there could be a 30% rally in metals, and that's exactly what's playing out in the calendar year. In fact, metals have outperformed every other sector. So we've seen that. But Manav, give us a sense on whether you do have a call on gold or silver, if at all, because the kind of rally that we've seen, before I come back to Indian markets, and maybe Snake can take a question there, but give us a sense, gold, silver, do you have a view?
Yes, so we have been very largely strong bullish on silver for a longer period of time. My base case is that the silver has actually kind of witnessing some bit of a breakout of its very long resistance line of 25 years. Largely speaking, we are recommending some partial profit here, but continue to ride the rally because the risk on scenario, at least on the emerging market and especially silver, which is likely to move higher from here, will continue to be a kind of a scenario which will do better. But we don't expect a very strong upsurge in gold from the current levels. Silver will outperform gold, but the equities in general will be the play to look at. So for us, the medium term upside for the silver is closer to 55, 56. But eventually, if that starts to break on long-term charts, I think keeping a number would be reasonably unjustified. We are recommending our clients to ride on silver, but take some partial profits and take on with some equities even at the current levels.
Okay, so that's your play on precious metals and not expecting much upside on gold right now. Manav, hi, this is Nehi also joining in. Let's focus on the Indian market now. On the charts, where do you see the Indian markets headed given the way we started strongly today? We fizzled out slightly from there, and especially on the SMIDs end of the basket. Do you believe they now have what it takes to outperform the large caps?
Yes, absolutely. So when we are looking at the medium term, long term perspective, yes, we do expect a strong catch up coming from the mid cap space. Small caps haven't done really that well, but we do expect after a sideways consolidation, small cap also to witness that breakout and outperformance to come in. But the current construct of the market remains that we have an upside base case of 27,500 for the Nifty. In that case, obviously, there are few sectors that we are very strongly bullish. We maintain a bullish bias, definitely starting with metals. The way the emerging markets are likely to see an upside of 25%. So metals is something which will continue to do rally from there. And we are very, very bullish on metals, at least even from the current levels, another 20% upside, which cannot be ruled out because that is the upper end of the channel of its long-term channel, which is roughly to 13,000 levels on the metal index. Currently, metal index is roughly around sub 10,000 levels, but we expect this consolidation and then larger breakout to play. From the large cap space, I think the BFSI as a space will do very good. We are very bullish on the PSU banks along with the NBFCs and the capital markets. So these are the few layers of the markets which we are very bullish on. And on the SMID side, coming on the SMID side, I think the infra is going to be another leg of a fresh momentum breakout, which we are anticipating. And I think it's going to be a proper beta play going forward for next 3 to 6 months.
And Manav, your top plays within, say, PSU banks, let me start with that.
Yes, from the PSUs, Harsh, we have now witnessed that the PSU banks are kind of coming to its previous all-time highs. Very constructive of one perspective that the PSU banks will definitely outperform the private banks going 6 to 12 months down the line. Even though there are few private banks have seen some bit of a momentum breakout, but the larger construct of the PSU banks is far superior. From within the PSU banks, very bullish on names like PNB, Canara Bank. We have a base case upside of 30% even from the current level. The PSU Bank Index, which is currently placed roughly at sub 7,800 levels, I think the larger perspective targets that we are looking is closer to 9,500, even 10,000 levels. So for us, the PNB, our upside closer would be 145, 150, and Canara Bank northwards of 150 plus. So there is a reasonable strong setup that we are witnessing in the PSU banks, and also with some bit of a cool off in the Indian 10-year yield, I think we will be seeing a strong upsurge coming into as a strong tailwind for the PSU banks in the near term.
Okay, so that's your take on PSU banks. But Manav, what about industrials? From what I understand, you've been bullish on the sector. You've liked that. So any particular plays within industrials?
Fair. So see, from the infra sector specifically, I would prefer to pick the non-conventional play at the moment. We have recommended medium-term upside bullish stance on Adani Ports. We have seen how Larsen has seen a massive breakout from its weekly and monthly resistance, and usually, these are very strong setups which are further confirming for the larger upside coming in. GMR Airport is also one of a very strong consolidation which we are witnessing into this stock. So largely within the, I would say within the infra packs, more constructive on these three names. The infra packs also constitutes of the cements and the OMCs, but I think they are more or less consolidating. But this is where the real trend and the momentum would be seen, possibly on the upside. So I will not be surprised to see a name like Adani Ports could be seeing levels of closer to 1800 plus. These are some Nifty 50 names which rallies of 20-30% could be definitely very meaningful, even though they are not very highly weighted on the Nifty besides Larsen, but yes, they are very strong constitutes when it comes for a stronger play. Even GMR Airport, we've seen very strong accumulation happen over the period of time. So we are quite constructive on the infra space. I think this is this is one of the sectors which have not really outperformed in the past few months. They have just started to gauge it's upside base formation, but there is far more upside that we see could be played in next 3 to 6 months.
Manav, what about your pick, which is metals? Now you've already seen a very good rally. What are your top picks within that space, and what can we expect going forward? What are the kind of returns? And we've spoken about this last time we spoke as well. And you were bullish, but is there a number? Because when I spoke to you at the start of the year, you said 30%, which is nearly now played out. So trying to understand what the upside from here is.
Absolutely. So Harsh, our early thoughts was, the emerging markets will definitely come back very strongly, and the kind of commodity cycle play, especially along with China, I think the only way to play India would be through metals. I think that part has started to play very well, and now we are seeing a lot of puzzle coming back into the space. Like I mentioned, the metal index, which is roughly at closer to 10,000 levels, in over the period of longer term, we expect it to go closer to 13,000 and even 14,000, which is a very strong upside. So the best play within the metals we are still recommending as a strong buy on dips would be Tata Steel. I will not be surprised to see if Tata Steel from here also sees an northward of 40%, because that's the best play within the large caps. For this stock to go towards 250, 300, there are strong setups which are likely to play out. And also when we're looking at the international steel prices, there are some uptick happening on that side. So I think the tailwind also from the international commodities will just flare it on the upside. So we remain very constructive. I think the base case of metal index coming closer to its previous all-time highs has played out, but the momentum, or I would say the larger upside swing, is yet to be seen. So definitely stay on with this. Tata Steel remains one of our top bets from the large caps. And from the mid cap space, very constructive on names like Jindal Steel and Power, but that is yet to see that kind of a confirmation and upside. But we are very constructive on the metal as a theme for a medium term, long term, even from the current levels.
Okay, so that conviction on metal continues. Manav, appreciate you joining us, and good conversation. But yes, and also hoping to catch up with you once again and many more times on the channel going ahead. Thanks for your time today.